fundsupermart.com.
The fund's largest sector allocation as of its January 2012 fact sheet is in the financial sector. What are the reasons for this large weight given the negative sentiment with regards to the sector?
Well, the financial sector is a bit of a misnomer. It's actually a very large sector. It includes real estate companies, it includes insurance companies, fund management companies, as well as banks. Yes, we do have banks in the portfolio. We have 3 banks. We have Standard Chartered, for instance, which makes very little of its money in the UK, very little in Europe. It is actually exposed to the emerging markets of the world, those regions that are growing more quickly, very strong management, etc., and a good valuation. We have a company, BBVA, in Spain, which actually makes 60% of its operating profit in Mexico and other parts of Latin America. And we have Nordea, which is a very strong, very sensible, well-financed operation based in Sweden and other parts of Scandinavia, which is a strong deposit base, which does traditional banking, i.e. borrowing at the short end, lending at the long end, and making a margin on its operations. So those are 3 banks, but in total, they represent about 10% of the portfolio. We also have a competitor to ours, Schroders, a very well-managed investment management operation, very strong balance sheet, good family operation as well. And we have insurance companies. We have one in Spain, Mapfre, with operations in Latin America as well. We have Zurich Financial Services, which is a very global provider, very sensibly run as well, very strong. And we also have Prudential, which has strong operations out here in Asia, as well as in the US as well. So it's a very broad representation. So ostensibly, it looks like we're overweight financials. And I get asked a lot, well, why are you overweight financials? Surely the Eurozone crisis causes difficulties for the banks, and indeed that is absolutely right. But as I say, the insurance companies, the fund management companies, as well as those good quality banks we own, represent the major part of our financials exposure.
What investment distracted most from performance over the last 12 months? And is the fund still holding on to this position?
The worst company we had in terms of performance and contributing to negative performance was a company called Mothercare, which is a company you could think of in 2 halves. On the one hand, you've got its international operations, which are very, very strong. And on the other, you've got the UK operations, which have been very weak, I'm afraid. The changes in consumer shopping habits in terms of using the internet for price comparison has hurt the UK operations. It's still quite a strong company in terms of its financial characteristics, a very strong balance sheet and so on, but there has been difficulty, as I say, in terms of the UK operations. And we've recognised that. We had a small position in the first place, but we did sell that position. So we've now exited the holding in Mothercare.
Are there any specific investment themes the fund is looking to benefit from?
Not really. I mean, what we're trying to do is just find companies which are in very good industries with a strong following tailwind, and companies that are well positioned within that. So all the companies in the portfolio, as I say, are very strong business models, selling things that the companies want to buy in terms of their customers, and have pricing power. So not really strong anything in terms of thematics or anything, but trying to avoid very difficult companies as well, harsh industries. There are certain auto manufacturers, perhaps airline industry, very difficult as well. So we'll probably avoid those areas.